Don Mazzella here again for Small Business Digest. You know, everybody's talking about where interest rates are going, where we're going to get the financing for the next uh, year. And I'm going to stop here because somebody came on board, your PR person. Okay, Lauren, I assume that you're going to mute yourself and your video, because otherwise you'll be on the show.
Yeah, that sounds good. I'll keep my camera off and keep myself muted. Yep.
Okay, then someone else. Who's Natalie? Boy, Matt, you got everybody on here. Oh, okay. Matt's out of pilot. I must be.
That one on there, Don.
Okay, I'm going to stop right now for a brief moment. Small Business Digest here with Don Mazzella as your host. We have with us Matt Carlucci. I'm personally really interested in hearing what he has to say, because finance of a company is critical. If I saw a statistic recently, 4 out of every 5 failures in the first 5 years occur the lack of financing. So Matt's going to help our audience figure out ways of getting money. So Matt, welcome to the program.
Thanks for having me on, Don.
Okay. Matt, as we ask all our guests, first tell us a little bit about yourself before you tell us about your company, and finally give us a website.
Absolutely, Don. Personally, my background, Don, is in economics and finance, specifically medical economics, where I've saved hundreds of millions of dollars for Fortune 50 healthcare companies. And so through that, the last few years, I took a step back thinking that I could do a better job supporting small business owners and companies in general, as opposed to these multi-billion-dollar healthcare conglomerates. And that around that time is when I connected with our founder and CEO, Richard Guzmano. And we've identified a highly underserved segment of the market, which you had just shared these statistics. These small business owners, they need help. And so it's riddled with opportunistic predators and individuals that don't have the small business owner's best interest in mind. And so that's really where we've come in.
Okay. And your website?
So it's bccusa.com, as in Business Credits Consultants, USA.com.
Okay. Well, now, Matt, to my way of thinking, the critical thing is banks will give you money when you don't really need it. Other people will give you money when you don't, but they'll ask an exorbitant rate for it or something. So first, how do you identify that you need money, and what time frames do you look for money?
Well, I always say that by the time that you already need the capital, it's not too late, but we should have already been looking. And that's why many of these small business owners, they fall victim to the opportunists. And so if you have any inkling or feeling that you might be seeking capital in the future, now is the time to begin the process. And that's a recurring theme, and that they fall victim to their immediate need, and they sacrifice the rates and terms that we're speaking to, Don, where they could be served far better if they had prepared appropriately with their accountant, where they had showed profits in a way that we can still minimize deductions. And so it's never too soon to begin the process, Don. And so if you think you have a need in the near term, getting in touch with someone like me, the time starts now.
It does. But, some people will say, will wake up one morning and say, oops, I need $50,000. I'd like to explore that a little deeper. Are there some of the things you can look at in your operations that will tell you that you're going to need cash?
Absolutely. It could be as obvious as your ending balances, maybe, or you're in a growth phase, which can be a double-edged sword at times. Maybe you have a big project on the horizon that's going to require some additional capital. So these are some of the warning signs. I would say that we're looking at growth. Many times there's a cost of capital to growth itself. And so we need to prepare accordingly. And when we start seeing these lower balances, or you're seeing that you have an additional need for more staff or more inventory or equipment, that's the time to begin. And these are all the signals that you should begin the process.
Well, someone said recently that people don't really want to borrow because of the interest rate has gone so high. What do you say to that?
I would say that it's not the same rate environment it was Q1 of last year, but we still are providing our clients with single-digit interest rate. Might it be higher than some of these great years where we're seeing the very low single digits? Yes, but still we're able to maintain these low. We had a 9.8% closing just this week. We had an 8.8% closing the week prior. We're still doing a great job keeping that cost of capital low, but it is, if we're comparing to these times when they were just out very, very low, then it is a little bit higher. But we're doing a great job still managing that cost of capital to ensure you're not paying very high debt service. And at times, if you're in a position that you fell victim or you just had to take that money because, like you said, Don, you need the money yesterday, the 50,000 yesterday, there might be an opportunity that we can diminish that debt service through a refinance, and plenty of opportunity to do so.
I'm listening to you and I agree with you, but when you see these success stories, they say, well, we funded it out of our own growth. I've often wondered how true that is. People always self-funded. What do you think?
I think that using other people's money is always advantageous wherever possible, and that there's a risk associated in a liability, especially when it's a volatile environment, not just rate environment, banking environment. I think any opportunity to use other people's money while bootstrapping, sometimes it's a necessity, Don, and sometimes firms are well capitalized in order to do so. But you reach a certain stage of growth where it makes sense to consider what banks have to offer, and that's what we do and specialize in: monthly payment bank finance only. Maybe you need an interest-only line of credit, Don, so you can, as a preventative measure in the future, you're going to have the most minimal debt service possible. You can draw from it as needed. You don't have to go through that long, arduous application process. I've heard you speak about the SBA process in past episodes. Nobody's happy with the SBA process, the long documents, the promises, the 1 in 7 statistic I think you shared in one of the last shows. We understand and recognize that, but there are mechanisms like interest-only lines of credit or other conventional term loans where you can still get great rates even in this environment.
Well, let's go down and be practical. I have a company. Let's say I have $1 million in sales, and I want to prepare a document for your company. By the way, give us the website again, so people know.
Sure, Don. BCCUSA.com, as in Business Credit Consultants, USA.com.
Okay, but I've got $1 million in sales. I'm got a pre-tax profit around 13%. Well, I'm using arbitrary numbers. What are some of the things I should be doing preparing to use your system or any system to get the best possible rate?
Sure. And really, it's going to stem to a couple key points. One of which was absolutely credit. It's never too soon to ensure you're on top of your credit. That's both commercially and personally, because many times, and again, I've heard you speak about this on past shows, the personal guarantee is a normal thing in this climate. And so you have to have strength personally on your personal credit and commercial credit. That's going to drive that rate, whether in today's climate, real numbers, Don, would be between 8.5% up to 18.5%. And that could vary, and high above that at other sources. That varies because many times the credit history. Other things like tax liens, they could be a hindrance. Now, additionally, for your example, the $1 million example, it would be, how do we file? If we have existing debt, we itemize the interest. Are we showing the officer's compensation? Are we showing some degree of a tax loss so that we're going to show less strength to have less tax liability? So to prepare is to ensure that your books are in order, because that's a common theme, is that we ask for these documents, the profit loss and balance sheet, and it takes a tremendous amount of time to turn them around from your accountant, which we understand. And so that it lies in preparation. And how do we get you the best rate on personal credit? You're paying things on time. We have no collections items. If we've had some mistakes in the past, maybe we've negotiated with these lenders or these trade lines to ensure we've mitigated the negative effect on the credit score themselves. These are the main drivers. And of course, It comes down to industry. If it's the publishing industry, there would be maybe a less risk profile. Maybe used car has a higher risk profile. In today's climate, transportation, construction, they're being scrutinized a little bit more. So there's different ways that we can navigate the landscape effectively. So for your example, we might be able to provide a few $100,000 on a 10-year term loan and maybe $100,000 interest-only line of credit revolver. That would help with growth and for any purpose you need.
Well, the interesting point is, if you're smart, you want to show on your tax return as little profit as possible, but you also at the same time have to show the most profit if you want to get a loan. How do you reconcile the two?
You said it yourself. Banks lend money to people who don't need it, right? And so we have to strike that balance. And that's where an expert like myself and our firm comes in. And we do consulting with your tax preparers to ensure that you're striking that balance. So you can still show a degree of strength through these add back deductions, but still have the minimal tax liability. Because again, banks lend money to people who on paper do not need it. That being said, we have other conduits and lending facilities that maybe won't scrutinize in the tax returns. Maybe it made sense, Don, for you to show losses on that million for that tax year, and it was advantageous for you to do so. Well, there's still other accelerated and expedited, less document intensive products that you could pursue and still be at similar loan amounts for that small business owner.
Well, let me ask you this question. In the first 2 or 3 years of any company, if you made a profit, it's extraordinary. But how do you demonstrate to someone that you're building something? Yeah, but the question is, how do you demonstrate that long term you're going to be successful?
Sure. There's an old saying, failing to plan is planning to fail. I would say that having plans and projections helps when you're early stage for someone who might be interested in investing in your dream, for them to understand what the future potential is. Showcasing it early is a proof of concept on, and what can we see? Maybe it's minimal volume of sales, but we can see the scalability of it. So showcasing that proof of the concept and the ability for it to be multiples more when you're early stage, that's important. And of course, think of it like you're selling your dream to somebody. You have to sell your dream. Why would the bank be interested in putting money out? And so think with that in mind. And so early stage, how do we prove ourselves? These initial sales, Don, are very important, and showing a replicatable proof of concept and how we can apply and maximize through volume. And maybe in that future, in that second, third year, we're turning the quarter towards profitability. And we don't, just to clarify, we don't need profitability on the tax return necessarily to procure a small business loan or a line of credit. That's not a necessity. There are programs where we're only looking at bank statements, and that's where it's important to keep these balances very strong and ensure you're just very just strong in balances for the most part, and as much deposits through that business account as possible.
Well, I'd like you to repeat that because that's very interesting. Would you mind repeating that? Because it's the first time on this show I've heard someone say that. If I heard you correctly, you're saying in the second and third year, not that necessarily that you'd be profitable during the year, but that you'd be profitable in a quarter or two. Am I hearing you correctly?
I'd love to clarify, Don. So when I say profitable, I mean from a tax return perspective. So back to your $1 million example. That $1 million example might have shown a loss on that $1 million in revenue. However, because we have a running 6 months or the time horizon for some banks, they're only looking back 3 months. That's the look back period. And so we can leverage the strength of those 3 months or 6 months and not have to go through the tax returns, profit loss balance sheet. We can seek hundreds of thousands of dollars without providing a profitable set of tax returns. Now, I know this sounds different for you, Don, because it's countered the sense of debt service coverage, which is how typically we'd illustrate to a bank your ability to service and pay back a loan. But we have these expedited loans and lines where they do not do as deep of a due diligence dive, and through strong bank statements, that's all that's necessary. There's an application, some bank statements, and a driver's license.
But if also I assume that most of your lenders want a personal guarantee.
They do. That's true, Don. And strong personal credit. Typically, they would like to see 680 plus personal FICO credit. And the days of the no personal guarantee or the just there are a lot of unsecured lending facilities, but it's less of the no personal guarantee lending, to be honest with you. And what I've seen, or the non-recourse, Don, is the word I was looking for, and that you don't have to maybe be on the hook for something. And the smaller business, they want to know that you sign on the line, that you believe in your dream. That would be, and that's really it. It's a signature. So you're correct to say that that's common.
Wow. Well, let me ask you this question. This is a curve a little bit, because if I have a woman on this show, and they'll say that they feel discriminated against in the loan process, would you like to comment on that?
I would like to say, Don, that we're lending to every type of individual at all times, and that I'm not, personally, we have actually programs that are driven towards women-owned businesses. So I'm on the counter side of that, Don, in that we are serving women-owned businesses and minority-owned businesses and veteran-owned businesses, and we've been seeking out programs to help serve them so they don't have the feeling you mentioned.
Yeah, women really feel, and it's some statistics I've seen, a man is easier, a man 35 to 45 is the last study I saw, is 4 times as liable to get a loan as a woman 35 to 45 in a recent bank study I saw. It seems someone how should we say, unusual given all of the pressure has been put on to help women. But you're saying, if I'm hearing correctly, that you have programs that will actually help a woman.
Absolutely. And we help women-owned business owners every single day. I helped a client who owns their own transportation company in Florida with a $350,000 term loan last week. I have a long list of home healthcare agency, woman-owned. I have the prosthetic wigs manufacturer. She's in New York. We have client after client of all industry sectors, and we're approved.
Yeah, the woman comes out off of marriage, and which she's been the stay-at-home mom. She has no credit rating, no personal. How does she get some sort of away from someone to give them a loan?
Credit's very important, Don. And the reality is there might be someone who'd be willing to give the loan at the lower credit, and it just might not be in their best interest. As I did say, I do have some programs that shed some of the credit criteria. They might take a lesser amount to help underserved sectors, as you cited in the study. That being said, credit is always an important criteria. So I would say it's never so nothing is ever unfixable. That it does take a consultant many times to translate what a credit report says, especially these commercial credit reports. But you get with someone who knows and is an expert, and they can help you fix that and affect some change in a short time period. Sometimes it does take more time, depending. I can't speak in a blanket statement, Don, for all backgrounds. However, I've helped many clients in very interesting positions that were challenged and put them in a position to qualify.
Your website again for people?
Absolutely. BCCUSA.com, as in Business Credit Consultants, USA.com.
Okay, let's go back to and talk about some of the more practical things I can do. What can my accountant do? What can my lawyer do to help me in this process?
Yeah, I'd love to speak to that. Preparation is the big thing. Having these financials ready. These accountants, they have their on season and then they're difficult to reach. I think you might know that, Don. That's a recurring theme. And so if we could have those financials quarterly, if we check in with that accountant to ensure they're doing the work and not just billing you in the off season, that's an important one. I think the lawyers, you have them when you need them. In most instances, we hope you don't need them. But the big thing is the accountants. And again, understanding how the reporting of financials, and understanding that interest and depreciation and officers' compensation are add backs. Having the expert in your corner. And this is not a negative against CPAs. CPAs sometimes focus on the reduction in tax liability, and they have a degree of tunnel vision on that. When we're lending, we need to show strength of the mantra of lending money to people who don't need it. So we show someone the strength of maybe not needing it. And so preparation in this tax off season, so to speak, that's very important. And so that when it comes time that you have an appetite and need the capital, you're not calling your accountant, he's 3 months behind or 4 months behind your financials, and you're on your extension. or maybe the tax return's overdue. So preparation, Don, that's a big thing. And hopefully you don't need the lawyer.
Well, I couldn't agree with you more. But uh, uh, for instance, out of an 800, 850 score on the system, is 600 or above? If you have that, is that where is the break even point or the break point?
600 is good, but many banks want 680. This kind of goes into the different gradings. So there's FICO 2, FICO 8, FICO 9. And so you can vary greatly. You can have an 80-point swing from FICO 8 to FICO 2. And some banks will look at that FICO 8 number. Some banks look at FICO 2. 680 is really the market that we want to be at. If you're at 600 many times, paying down some cards, bringing that utilization, the availability up, that's going to be the biggest driver. You can do an 80-point swing. I see it every single week in just paying down these credit cards from going from 2% available to 82% available. So that's a big one. The 680 is what we want, Don, but around 600, I can help you.
Above 600. Okay. All right. Okay. That's good to know. The reason I tell you this, Best Buy just canceled my card.
Oh.
You know, I'm sitting there. I have a Platinum American Express, so I'm fairly. Yeah, they canceled the card, and FICO just knocked me down 50 points. You know, and I said, now I've written to Best Buy to find out why they canceled my card because I paid everything up, but they haven't written back and told me why. But
what a great point, Don. And that's the reality. We think that we pay something off, or a closed account might help us, or maybe they closed the account on their behalf, not our behalf. And here we go. We lose 50 points on a credit-worthy individual such as yourself. And that's, yeah, I understand, Don. We do see that.
So if I wanted to apply, it would look right now. But but the other side of the coin, my wife is 840. So, you know, she's right at the top of the range. So who knows? But that's why the FICO score is another one of my pet peeves because it doesn't make sense.
I'd love to speak to that a little bit. It's very archaic in the technology and how they're tabulating. Think about that. They close an account, probably one of your lowest available amount accounts, and you had a swing of 50 points. It's the technology is old, and we see this in banking as well. And that's what we're trying to bring in more of, more transparency. We're a fintech bank platform, and we're trying to drive smarter, more seamless technology where these banks are similar in many instances to the credit companies, and that it's not the day we're the age we're in today. So that 50-point swing shouldn't have taken place. Maybe previously you'd be declined at some banks for that swing. But what I'm trying to do is get you on a fast path through this technology, through understandings of personal commercial credit, your trade line data, your Dun & Bradstreet, to help you get in a position to qualify or have the transparency to understand why you would or would not qualify, Don.
You know, it's weird. It's funny. But we have just a few minutes left. What would you like to leave our audience with today? But before you do that, give us your website again.
BCC, as in Business Credit Consultants, USA.com. BCCUSA.com. Don, I'd like to leave everybody with, we understand that if we're reading the news and there might be some fear involved, we might think that rates, they may increase again. But the reality is there's still opportunity out there. And it's never too late to fix credit. It's never too late to consult and start preparing for the future to qualify. It's never too late for somebody. We see this sometimes, and people get beat up to that background. Don, not everybody's still an 800 after dropping 50. Maybe they were 600 finally, and they dropped to 550 because Best Buy closed an account on them. I want to leave everybody with, it's not too late, and getting in front of someone like myself and my firm to help you get on that path to qualification, that it's never too late. And although you might be reading some negativity in the market volatility and the rates, we're still helping people every single day.
How long does the average application in your system take?
Sure. Typically, we can have approvals within 3 to 5 business days. We talked back about preparation, and there's a couple paths. If we're talking SBA, you and I both know there's a higher, I don't want to set you, Don, there's a higher processing component. That being said, I have a 2-week, 10-year, $150,000 term loan that's turning around regularly within 2 weeks. You might not believe it. There's still 25 pages of documents yet of paperwork, but that's an option. And then that would be our non-expedited. Our expedited accelerated term loans, lines of credit, we're talking 3 to 5 business days for approval. Now, it also depends on the client, Don. So when we talk about preparation or being available for a bank call or being responsive with questions, that's going to drive the turnaround. So it's not just 100% on us, but typically 3 to 5 business days.
Well, Matt Carlucci, thank you very, very much for a very illuminating time together. Thank you.
It's been a pleasure, Don. Thank you very much.